What's going on, traders? Hope everybody had a great day. It is the first day of the month, June 1st, Thursday. One day left in the short trading week here, and markets were on a rippy mode today, up 0.95%, nearly $4. Final print coming in at 421.82. We're looking at the daily chart of our baby here, the S&P 500 Spider ETF. But before we go into what we are looking at in the markets, don't forget to subscribe to the channel if you are enjoying the content that I am providing about the markets. We nearly post updates every single day. And if you'd be so kind of smashing that like button, really helps out the channel, push out to more people with the YouTube algorithm. And don't forget to turn on that notification bell. That way you are able to watch these videos, you are alerted, and that way you are prepped, or at least have another opinion about what might go down in the markets. So with that being said, let's get into it. We are here now back at our old friend, the top of the megaphone channel. We are still above value. So far, the buy the dip theme has still worked out. So we talking about this yesterday. We came back in, tested the top of this range that we've been watching here on this chart. Buyers came in right off that 416. We were looking for that possible gap fill in our plan yesterday, and that played out nicely. We will go over that in a moment. But now we're back again, much to the bears' chagrin, here at this really key level, and we'll have to see whether or not the bulls can come through with follow through to finally lead us to that ultimate target. We've been talking about this 425 for a little bit, and so let's see if we can get there, but likely to see some type of breadth consolidation retraction tomorrow, since we saw pretty much a trend day all day. But bulls remain firmly in control now, and we will obviously still talk about a bear and a bull plan for tomorrow, but I do expect it to be a slower type of day considering what we had today, probably plus or minus 25, 35, where we just probably print some type of an inside bar on the daily chart. But we'll look at the weekly over the weekend and see how that candle starts to print, and then also that will give us a little bit more of a clue on what we might see tomorrow. Momo here on the daily still has plenty of room to go up, so we're not seeing any overbought readings there, although we are above value. And on the weekly, though, we were talking about this. It's starting to get a bit spicy here on the weekly, but it doesn't mean, of course, that we can't stay overbought. As you can see here in July, we ran. Where were our readings here on our Momo? Let's see. We were up by the 13 area. Right now we're at 17. Oh no, now we're at 1170. So this can go even higher. I mean, look up here. Back last summer, it went up to 13. Let's see, the highs here were 1280, 1330, and yeah, like I said, right now we are at 1170. So we can still see a little bit more upward thrust, but I am certainly watching this as we get into this trouble area on the weekly, which could definitely signal a much more aggressive pullback when we do see it. And again, that doesn't mean that I think that we're going to crash or anything like that, but we're just talking about retracements and these things resetting, and then ultimately, if we hold our key levels, resetting for higher prices. But we are still looking at that 425 area, and then ultimately over that, as probably looking for as close to 430 as we could get. So those have been the levels that we've been talking about for a couple of weeks now, and we will see if we actually get them. But we are in a interesting spot, back in this pretty much back in the gap that got filled, and I think this is a nice time to also mention, you see all these doom and gloom posts on Twitter, social media, and price has done nothing but gone higher, right? We had these gaps here, and if you go back on our videos, our updates, I was saying I think it's pretty much more likely that we fill this gap before we fill any of these gaps. Now, can these gaps be filled? Certainly can be at some point, but timing that is very hard, and the most important thing is to leave the bias at the door. I'm sure everybody has a macro perspective, why we should be going down. Price says otherwise, and that is what is most important. If we wanted to really start to break down and fill these gaps, we would have had to break this double bottom here, this 404.25. Then we would have had a chance, maybe, especially if we got under 400. Okay, we could have filled it. Did that happen? No. Did we, after we broke out of this symmetrical triangle, pennant, whatever you want to call it, we tried to, bought back up, tried to, bought back up, came in here perfectly not too long ago, right, at the May 24th, bounced right off. All right, so until these key areas get broken, it's real hard to be in that major bearish camp, and that's why price action is king. So I just wanted to say that really quickly, because some people swinging puts, and keep getting smoked on them when there's really no reason to be holding puts, especially underwater. Yeah, we took a little short, I took a short trade right here. If you recall, we go back and look, we talked about a short trade that we took here. I took a short trade here, and it might be time for another one, but not quite yet. I'll certainly let you guys know when I do that, if I do, but either way, it's just for your entertainment anyway, and not advice at all. So here we are back in this area. Let's see what happens. I think tomorrow again we're gonna have a slower type day. We had the volatility, a range expansion, and now we should see that consolidation. And let's get into a couple of things. Let's dig a little bit deeper on that note, because I think it's important and where a lot of traders get into trouble here. Let's look at, well, we could look at it here, it's fine. All right. Now, when we talk about these cycles in the market, and obviously these days when we're trending are the easiest ones to trade, right? But we talk about breadth expansion and then breadth consolidation, right? Breadth thrust and then cooling down. We've talked many times also about, the markets being very much like a human, right? It runs and then it cools down and consolidates, takes a breather. So here you can really see that overall in the chart. And now this area here is a little bit smaller. Why isn't it letting me? Let me actually close this really quickly. There we go. All right, consolidation. You can even call this a little. We started to make an uptrend here, but you can even really call this consolidation as well. Okay, consolidation, bit of an expansion. Consolidation, what do we get? Expansion. Okay, same thing again. What do we have here? Breadth consolidation, expansion. What do we have here? Breadth consolidation, and then expansion down to trend. All right, so understanding these cycles, and when we get into areas when it's like this is when traders often do the most damage into their accounts. So understanding these cycles that the markets go through, and they'll just do it again and again and again and again, is key, because when we're in a move like this, okay, that's when you can push on the gas. That's when you make the most money, right? On the expansions of volatility and big moves in the market, right? But when you're in this areas, that's when you step off the gas, and recognizing which cycle we're in at the time can really save you a lot of headache, and hopefully protect your account and know, okay, right now we're in a breath consolidation mode. Things are quiet. Let me just be careful and take some time off the gas. When I see the market moving up strongly or down, all right, now I can take advantage appropriately and trade my full size. But these areas are when traders get into the most trouble, right? So I just wanted to kind of put that out there for you guys, understanding these and what type of cycle we are in at the time can really help you protect your account and know when you should be pushing on the gas and laying off the gas, right? So what happened today in the markets? All right, obviously you can see, boom, very nice moves. Let me just go back a little bit here. Now, we were talking about, right, the 38 held, and we got back over this morning. We got back over that 418.43. I think I said that about 10 times yesterday. That price level is being key. This 23.6 level that needed to be recaptured, and then ultimately we were looking at the 420, right? To having to be broken to really get the bear momentum on, and you can see what happened after we broke over, and that was pretty much Wednesday's pre-market highs. And that was, because that was 419.83. We got over those pre-market highs, and also lines up pretty nicely here with Friday's trend day, and boom, we were off to the races. We were also talking about that yesterday's lows needed to be taken out, right? And they were. And then we saw the squeeze. So let's just go back into the chart we were looking at yesterday as far as the daily plan was concerned, right? We were in this range, okay, but then we broke the range, and we broke the lows here, broke the range, and that was our bull plan. This was our midpoint. So these were the key areas. Now, certainly if we would have broken, you can see how nicely right into our price here. Right in the morning, we opened up, came right into 416. What was the actual low here? 416.79. Okay, I'm at 416.74. All right, so pretty damn close. Boom for the long trade. If you really wanted to wait over this midpoint here, first sign of a bullish potentiality, and then certainly once we cleared over that 418.43 and 72, we were on here because we started breaking over yesterday's highs, and that caused the squeeze. I started a little bit late today. Unfortunately, if I would have been at my desk, I probably would have gotten in around here long. I don't really trade the open too much, so I wouldn't have gotten in here. But beautiful hammer candle right here, right at 9:45. I probably would not have gotten this. I think this was 41.85 or 84 or something like that, and that was my key area that needed to hold on futures for the bull case to still stay valid. Starting breaking under, okay, then we would have talked more about that short plan. But I know right around in this area it was about 41.90 on the futures, and oh god, I would have been all over that. I missed it, but I got like I said, I got to the desk a little bit late today, but I actually waited. So we broke out of the range, and we talk about this trade a lot. We broke out of the range, right? and then we simply came back and retested those pre-market highs, which just so happened obviously to be the range that we were looking at. And this is where I got into some calls, and on futures we got in some I got what was it, 4203, I believe, and then we rode it up to about here. We had another nice little flag pattern happening right here, as you can see. This is where I took a secondary entry. I was really looking for us to come back and retest this 420, 50, 80 area, which we ultimately did, which was a key level for us to get over. And this was 42.20. This was 42.20 on futures, and that was the key area that I was targeting, and pretty much why I got out of my long trade once we did hit it. But I was hoping here, and I thought that it would be normal price action to come back, retest it, and then move up higher, and to see if that was supported. And that was important because if we go back and look, okay, let me get it a little bit clearer here. This was where we broke down from before. You can see the highs here, and when we were consolidating here in Memorial Day, right? This was Memorial Day. We consolidated on this area, we came up, popped up, and then we broke under, and that was the key pivot area that caused this move back down, the slight retracement. So I was looking for ultimately that back test of that area, or that's where I was looking for price to be drawn into, because there were so many orders here left in inventory that needed to get worked out from this move down, and price is just going to move to areas of big liquidity, right? And the big liquidity is there because you can see what happened after we broke it. So markets were going to be drawn up into that area again to work out that in the auction. And so you can see when we did finally sell, actually I tried a short trade because I definitely thought that we needed to retest that area, and that would be healthy in price action to see there was liquidity probably still in that area that needed to get filled, worked itself out in the auction. And you can see the buyer reaction after we came back and retested it, affirming the buyer presence there, and boom, we got a nice little move into the close, which I really wish this happened. Well, yes, earlier, because I did take a short trade because I was thinking that we did need to retest this area, but I actually got stopped out. I got into a short, I think, right around here, but then I got stopped out as we moved up, and I did this on futures. I didn't take it on options, but this was the move I was looking for that retest of this key area, but I didn't get it. I did get a little long off here though. I wish it happened at night because I just played it on the micros. If it was at night and this came in, I definitely would have taken the full minis on that, and that was a nice about 7 point bounce there, which could have been really fun. Either way, now this is going to be the key area that I'm watching, right? This 420.85, 420.80. We can go a little bit lower if we want to make a little demand area here. Okay. So this zone is going to be ultimately what I'm going to be watching for my bear and bull pivot. We start breaking here, and this is about 4,200 on futures. 42.20, excuse me. We start breaking under here, then this is going to be a fake breakout, and we will look for the retracements back down. Potentially, I wouldn't be surprised even to see if 420 breaks. That's going to be also important. Whole number, psychological, we can't forget about that. But if that certainly breaks, I'll be looking for a back test of the whole start of this rally here around 419. 420, 419. So that can be an area where if we do sell, might consider a long trade to come down here and then boom, retest and come back up, and then probably look, if I take 419, 23, I'll probably look for that first target at 420 and then to come back up into this zone of 420.50. That would probably be my plan on that type of dip trade. But if we do break under, then like I said, I'll probably be looking for some shorts retracement down into this zone. Obviously, if they break, then we're going to be looking to come back into this area down here into the 418 area, and yeah. But what I'm thinking for tomorrow is there is a chance. What I was thinking that we could run a little bit in the morning. Now I don't know exactly when. It could be 10:30, 11 o'clock. There is a chance we see some continuation in the morning. We run up. Maybe we come to maybe we hit this 423. Now that's going to be the big level. That so far is the swing high. Let's go to these fibs really quickly. Whoops. Okay, here. Yeah, you can see we went, pretty much fib to fib. And that's going to be the key area, the swing high. If they can get over, okay, then we're going to start to look for a little bit higher prices. But I would be very careful personally that it's not a fake break and that we don't start to rotate back down. So does that mean that I'm just going to short 424? No. What I would probably do is sit hands off, see if we do come up here and then we do break the 423, I'll consider that a fake breakout and then look for possible shorts to start for some type of retracement to the downside. But I do think in the morning we might see some continuation, maybe to early morning. It could be around 10, so it might be earlier, but if not around 10, then I would have to say probably somewhat before lunch, maybe 11 o'clock or so, and then we start to see a reversal. I wouldn't be surprised to see a type of an inside bar day on the daily, plus or minus 25 to 35%. So watch out for that type of day. So that could make sense that we pop up and then we come back down and we just end up trading kind of in a smaller range overall. Let me go back to this. In a tighter range after all. They could possibly defend this area. Ideally for the bulls, they do want to see the defense of this area, but if it's broken, like I said, we'd be looking for more retracements to the short side. But let's see about that 423, which also, again, if we break up and then crack below, could be a failed break setup. And then probably want to get out most over here. The other scenario is if we do sell and we do crack here, okay, then we'll be looking for, again, shorts to come down. And yeah, I might consider a long down, like I was saying, in the 419 area for a move back up. That could definitely be a scenario as well. But as it stands, the 423 is going to be the big level. I'm not going to be too interested in going too heavy into the longs. It's Friday, it's the end of the week. We want to preserve our capital and just make sure that we get the start of the month off on the right foot. So I think that's pretty much everything I wanted to go over. Watch to see over 423. I think we can see slightly higher prices. Let me get out. Okay. All right, I have to see. I don't have much in this area, so I'm going to have to see how this plays out. But here are some levels up to the upside that I'm looking at. We could come, if we do get into over 423, maybe 424.50 area, and then ultimately, again, we've been talking about this 425 for a while, but we could just come up into this zone, and then we start to see the retracement, and we end up trading somewhat. If we do stay up there, we could end up trading in a range something like this, for the next couple of days. as we go into a more of a consolidation cycle. If we do start to break below that key area though, come on. All right, it's not gonna let me draw it. This is definitely tradable, right? It's like $3 or $4, so it's not the worst, but it's also, like I said, it's not the time to be stepping on the gas when we start to get into that. But like I was saying, the 420 420.80, 420.50 area, that's going to really be my key zone that I'm going to be watching for the bulls to be able to defend. But like I said, it doesn't mean I'm not going to try to dip buy down here, because this is definitely, a retest of this base also makes sense to me, and for it to be supported. So I mean, I would take that trade personally 9 times out of 10. That's just normal healthy price action. Will I try a direct buy in this area again after it's been supported? It's yes, I probably would, but not with much size. It is a little bit riskier. It's been tested once. It could hold again for a double bottom for sure, but I just want to be mindful. And the more times these areas are tested, it's like chipping away at a rock, and it could be, it gets a little bit weaker. All right, I just noticed that this video is 25 minutes long, so I am going to cut it right now. I hope everybody has a great day tomorrow, and we will see you on the other side.